On December 4th, the investment world was shaken when Brian Thompson, UnitedHealthcare's CEO, was fatally shot in Manhattan. It's the kind of event that reminds us that behind every stock ticker and price movement, there are real people and real lives. The market's reaction was swift and significant. UnitedHealth stock has dropped about 15% since the incident. Now, for those already invested in UnitedHealthcare stock, you might be wondering, is there more downside ahead, or will the stock stabilize and bounce back? Well, let's break this down and look at the bigger picture. First, let's put this decline in context. Before this tragic event, UnitedHealth was actually having a pretty impressive run. In July, the stock broke out of a consolidation pattern that went all the way back to April 2022 and was setting record highs. It had climbed roughly 14%, breaking through the key $600 level and was pushing towards $650 when everything changed. This 15% decline has essentially pushed the stock right back into that long-term consolidation period. And if there's one thing I've learned from studying market history, it's that black swan events like this tend to cause shock in the short term, but eventually get absorbed into the long-term trend, showing little to no signs of the declines on the higher timeframes. Think about COVID-19 for a moment. When it hit, the S&P 500 took a massive 35% dive in just 2 months. But since then, it's up over 170%. That's the nature of black swan events. They're shocking, but they don't necessarily change the fundamental story. Speaking of fundamentals, let's talk about what makes UnitedHealth such a powerhouse. This isn't some speculative tech startup. We're talking about a company that's been publicly traded since October 1984. If you had invested $1,000 in UnitedHealth's IPO, it would have grown to around $622,000 by November 2024. That's a massive 62,200% return. Now, before the incident, UnitedHealth was sitting pretty with a market cap of around $506 billion, making it one of the top 20 most valuable companies globally. The market cap has dropped to about $479 billion since. The company has consistently demonstrated 3 key strengths that have made it a market leader. First, they've built an incredibly diverse revenue stream across healthcare services, insurance, and technology. Second, they've shown remarkable ability to adapt to regulatory changes, something that's crucial in the healthcare sector. And third, they've maintained some strong pricing power even in competitive markets. Their Optum division, which provides healthcare services and technology solutions, has been a particularly bright spot. As of the third quarter of 2024, Optum played a pivotal role in UnitedHealth Group's financial success, contributing around 50% of the company's total profits. UnitedHealth Group reported impressive revenues of over $100 billion during this period, with a significant share driven by Optum's performance. This diversification beyond traditional health insurance has been a game changer for the company. So what has been driving UnitedHealth to record highs before this happened? 3 main factors. First, they crushed their third quarter earnings, as we just looked at. Second, they showed incredible resilience by maintaining their full year profit forecast despite a major cyber attack on their subsidiary, Change Healthcare. And third, analysts were overwhelmingly bullish with price targets of up to $640. The market hates uncertainty, and sudden leadership changes, especially tragic ones like this, create a lot of it. However, UnitedHealth has a deep bench of experienced executives. Their board includes veterans from across the healthcare and business sectors, and they've navigated leadership transitions before, albeit under different circumstances. The company's robust corporate governance structure means they likely have a solid succession plan in place. While they haven't announced a permanent replacement at the time of this recording, watching how they handle this transition will be crucial for investor confidence. Historical data shows that companies with strong succession plans typically recover faster from unexpected leadership changes. But here's the million-dollar question. How quickly can they recover? History gives us some clues. Back in 2019, UnitedHealth faced a different crisis. fears about Medicare for all sent the stock plummeting 25%. But guess what? By the end of the year, they not only recovered but hit new highs, climbing 37% from the bottom. We've also seen similar patterns with other blue chip companies that faced sudden leadership changes. While each situation is unique, companies with strong fundamentals typically show resilience. The key is whether the underlying business model remains sound, and in UnitedHealth's case, it certainly does. Looking at technical indicators, there are some interesting patterns emerging. The stock is trading just below its 200-day simple moving average, a key support level. However, it is normal for a stock to swing above and below the daily 200 simple moving average when fallen into a sideways market. So the fact that it is now trading back below it should not be of major concern. The stock fell below it at the start of the year and then swung back above it in July, where it remained until this recent incident. Volume patterns suggest institutional investors haven't been panic selling, which is a positive sign. However, we are seeing some concerning divergence in momentum indicators that suggest we might not have found the bottom just as yet. The key to recovery now hinges on a few critical factors. Leadership transition is obviously crucial. How quickly can they establish new competent leadership? Then there's institutional investor confidence. Will the big players like BlackRock and Vanguard maintain their positions? And finally, will their long-term growth initiatives, especially in their Optum healthcare division and AI development, stay on track? Let's also consider the broader market context. Healthcare stocks typically show defensive characteristics during market uncertainty. For example, McKesson Corporation climbed around 60% in 2022 when the S&P 500 declined 28%. UnitedHealth's position as a market leader in this sector could actually work in its favor if investors start rotating into more defensive positions. Their strong dividend history and share buyback program could provide additional support for the stock price. So what's my take on all this? Right now, I'm staying on the sidelines. While some might see this as a golden opportunity to jump in, remember that the COVID crash took 2 months to bottom out. This event happened just recently. There could be more turbulence ahead. I want to see the stock price move back above the daily 200 simple moving average and then show confirmed strength from there. But even then, we'd still be in a sideways market. For a really compelling entry, I'd want to see the stock break out and start setting new record highs again. And if you're thinking about shorting the stock, remember that the long-term trend is still bullish. The odds are very much stacked against you. Palantir is also still bullish and soaring towards $100 and still a very young stock. Watch this video to see if Palantir has what it takes to reach the milestone and outperform other stocks with a longer history in the market.